Hey there, welcome to Elementary, Mondays at 6. I hope you had a great Easter weekend. And if you don't celebrate, I still hope you had a fabulous long weekend. So my guests today, you've seen them before, and they've been on the show before, and I can't wait to continue this conversation that we've few weeks ago. So from wherever you're watching, thank you so much for joining us. And I see there you are.
Hello.
Perfect. Perfect. Hi. Thank you
How
again.
are you?
I'm good. And you?
I'm doing well. I'm doing well. Thanks for
That's,
asking. Just
yeah.
trying to get you here on my headset. Okay, so the headsets are not working. It's okay.
Oh. Uh,
It's okay. How are you
no,
been,
good, good.
Jacqueline? How are you?
I'm good. I'm good. And you?
I'm doing
That,
well. I'm doing well.
that's
Thanks. The floating
good.
head is back.
Yeah. Yeah. That's good. So I was excited to continue this conversation, to have this conversation because, we had a good show the last time and I didn't get to ask all my questions,
Yeah,
which I always
yeah.
seem to, jam pack it with stuff. But we'll get started. I know people have seen you before. They probably know who you are, but let's introduce yourself and your Instagram handle.
Absolutely. Yeah. So my name is Mani Najafi. I'm a mortgage agent level 2 with North Power Mortgages Inc. here in Ontario. My primary focus is Ontario, but again, we have co-brokers and partners all across Canada. So we're always happy to help out any clients that are looking across Canada. And if not ourselves, we love to connect them with people that can help them and get them the desired outcome they're looking for.
Perfect. And so, let's jump right into it. Let me just
Yeah.
go ahead and ask you, like, what's trending?
What's trending?
What's
Um,
trending?
okay, so since the last time that you and I spoke, the same topics are coming along. The first questions that anyone that calls me is, when are we going to see a rate drop, or what's
Mm,
happening with the rates? And the second thing is, I need help with either my mortgage renewal or a purchase that I have, particularly first-time home buyers. There's a lot that they hear in the market that's happening. So, my first question is, well, what's your desired outcome, right? Because I think that a lot of people are focused on the wrong thing. They're looking at rates, rates, rates. And we anticipate a rate drop from Bank of Canada at some
mhm.
point, right? The initial consensus was that by June, we might be looking at a small drop. What's happening since the last time that you and I spoke is that banks are taking it upon themselves to lower their fixed mortgage rates based on where the bond yields are going. They're headed down, so they're offering actually much better rates in terms of fixed. Bank of Canada is probably looking at a rate drop, if not April, then probably in June, because the Canadian economy as a whole has slowed down and productivity has gone down. I'm sure you've seen it in the news
Mm-hmm.
last few weeks that Canadian productivity is almost non-existent. We're dropping far behind our economic allies and partners. I think we're outside the top 10 in terms of productivity with all the large economies that are close to us. So at some point, a reduction needs to happen in order for the rest of the economy not only to get going, but also the Canadian housing market. Now, when it comes to people making a purchase, I think looking at a rate drop is probably not going to help them as much. And I say that for two reasons. Number one, if you're looking to maximize your mortgage and qualify for the highest amount, you have to start with the lowest rates right now, right? Because when you factor in the stress test, which is an extra 2% on your purchases, then starting at a fixed rate right now would be actually to your advantage because fixed rates right now are much lower than variable rates. So waiting for Bank of Canada to drop rates is not necessarily going to affect your purchase power right now if you're looking to purchase. And second, if people feel much better about what's happening in the market and rates, you're going to have a ton of buyers that were just sitting on the sidelines for the last 2 to 3 years, potentially entering the market. So you're going to be competing with a lot more buyers. And we've already seen that where the limited supply that we have are getting multiple offers again, and they're selling for a little bit higher price. And in some areas, that game is being played really well, where they price it just enough to get multiple offers, and then it slowly goes up. So as a buyer, you might be putting yourself at a disadvantage if you're just waiting for rates to drop.
Mhm.
The question is, can I afford the payments right now? And can I pick up the desired home or a desired property in the area that I want at a lower price right now, right? Because we know the limited supply that we have, if there's more buyers, that's only going to generate more demand, which means the prices are going to go up. So you really should be looking at making a purchase maybe yesterday, is that, as they say, right?
Yeah.
So that's the main two questions that are happening right now. Of course, everyone's case is very, very specific. You know, that's a small discovery call can determine a lot of the outcomes that we're looking for.
Yeah, it's true. It's true. Now, just so people know that if you have a question, there's a question icon in the comments. I'm monitoring
Yeah,
it. So if you have any questions, drop it in one of those areas
yeah,
and we'll try to get to it today. We have like a jam-packed show with a lot of, you know, a lot of stuff to, a lot of questions to ask. But,
yeah.
on the
I
flip
mean,
side, when
people are
we're
not.
talking, go
Yeah,
ahead.
I was going to say, like, right now, there's just a lot of uncertainty.
Yes.
So everyone's questions are very unique to their situation. So we can't, obviously cover all of it. I'm happy to
Yes.
answer any questions offline, or if they want to message me or
Yes.
yourself. But I'm talking in the general sense here right now.
Yes, yes. And this is the thing that I've been trying to explain to people, timing the market, looking at, the rate, getting like obsessed over certain things. Not all mortgages are equal. And so just, not making the right decision,
Mhm.
or holding off, not asking the right questions. Now, it doesn't mean because you come to me, I'm going to tell you to buy a home. I
Yeah.
mean, look, you either can afford to buy this home or you can't. And
Mhm.
but you need to get the right guidance, not just go out blindly and do something because someone sells you a good bill of goods, you know what I mean? I'm
Yeah.
seeing a lot of things happen where people, obviously there are some people that are struggling and quite frankly, they could not even afford the house a few years ago. So I'm not quite sure, how they will afford the house on a move forward. Now, I mean, there's a lot of different speculations. People are looking at it, wondering, how soon will the rates drop? Will the rates drop? And the rates don't drop like boom, 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 like right away. You're not just going to go from, where we are to like right back to where we were. It's not going to happen. So if it does go down, it'll go down half a basis points, like three quarters, and maybe even one. But I don't think it would go that much, even in this year. Maybe next year, you'll see a couple. But even then, it doesn't take you far enough to where we were. You'll never be where we were, right? And so,
Yeah.
uh, there's a couple of different factors that are playing a role. But all I say is make whatever decision is the correct decision for you and your family. You have to live somewhere. Where is it going to be?
Yeah.
It's your
And I
choice.
completely agree. Yeah.
Yeah.
I mean, the term timing the market, uh, it, it doesn't mean much when it comes to buying a home. Like it matters whether you have a stock and you want to sell it high, you want to hit it at a certain point. But I always look at it as, what does it mean to you to time the market? Well, if you're waiting for rates to drop, then there's a good chance that home prices are going to go up. Right. It's just the basics of supply and demand. We have a massive shortage, particularly in Ontario, and the population growth that is seen. Right. So it's really whatever's happening that day that's kind of driving the demand and supply in the market. So I always say is, okay, well, what's the right time for you? Do you have a stable job? Can you afford a certain dollar value of a home? What's a desired area that you want to live at? What's the desired outcome for this house? Are you going to be living in there in the next 3 to 5 years, or just going to be a rental investment for you? And what can you sort of afford on a monthly basis? Sure, if rates get better, we can always look at refinancing your property later on to reduce your monthly payments. But if you have a desire right now, you have a goal for you and your family, and you want to move to a certain area, and you can afford X, Y, and Z. Those are the factors that you should be looking at. You shouldn't be looking at, oh, can I pick up this house? When rates drop. We're not going to be looking at a massive rate drop. If Bank of Canada doesn't surprise us, we're probably not going to look at it until June, right? There's a rate announcement happening on April the 10th. And then there is core inflation numbers that are coming out April the 16th, right? It's no coincidence that it's happening afterwards. If the number inflation was good, it surprised the market in March, but I personally don't think anything's happening. If it does happen, it might be a 0.25 drop, maximum 0.5 by June, right? We have a saying in our industry that Bank of Canada takes the elevator up, but they take the stairs down. They're going to be very, very careful. They always like to overshoot their numbers because they don't want to decrease too fast and realize, hey, inflation is going back up. We're not doing enough to get out of this recession that we're having, so that they have to go back and pull it forward. So they'd rather just wait, keep it as is, or drop it by 0.25 or 0.5 by June, July, maybe even by midsummer, in order to see some changes happening, and then they'll wait a little bit. So potentially by next year, we're going to be looking at maybe a full percent and a half to drop, right? I think what they want to aim at is for bank prime to be somewhere around the 5%, 5.5% mark. So that means that they're going to slowly want to drop it over the next 2 years, right? And you can see that in a way that the banks are pricing their 2 to 3 year fixed rates, because that's when they anticipate, for the most part, for variable rates to sort of line up with fixed rates over the next 2 to 3 years. So again, you shouldn't be looking at the price of the rate, right? You don't look at the price of gas and decide how far you want to drive that day. You look at your destination and you say, okay, it's going to cost me this amount, and I want to get to that destination, and that's what it's going to go. And that's how I look at homes and houses. If you need to move, you're first-time home buyer, you do have some money saved up, and you don't want inflation to erode your savings in your bank accounts, it's a good idea to start investing with that money right now. Put it into a down payment, and depending on how much you have saved up or what you can afford, again, those are numbers that we can run at. But look at the properties. If it's not the area that you're looking for with your price range, then maybe you should broaden that up. So there's changes that you can make. Like a lot of the times, waiting to time the market, more often than not, it doesn't really give you the desired outcome that you're looking for. And look, I've had clients come to me and say, I want to time it. This is how much I can afford. And my question to them is, no, you can't really afford this because you're pushing into your maximum. What happens if there's a rate increase or drop? You have children, you have all these other obligations that you have to look after, right? So we can come up with a better plan that's right for you and just put you in the right direction, right? And I'm happy to give everybody a second advice, a second look at things if they've already gotten it done with somebody else, or vice versa. I'll put up my plan against anyone else's because I truly believe in what I do, and the questions that I ask my clients and the desired outcome they have, I'm very good at coming up with a plan to help them in the long run, right? But it's just a matter of, okay, is this the right plan for you at this given time?
Yeah, and I've been seeing younger people, getting in touch about buying homes, even if it's something small, just to get into the market. But you're right. The one thing I want to tell people is that if you're in this 30-day window and you're looking at, someone's pulling a credit on you, make sure within that 30-day window you get checked in with whoever you want to, because within that 30-day, it only counts as one hit, because they understand you're looking for a mortgage.
Yeah.
But so be smart about it. I know people say, oh, I don't want my credit pulled. So that's why I wanted to tell you that within that 30-day window, it'll count as one hit, even if you go to a different provider. But you mentioned something that you talked about is a stress test. And I know people hear this, and I'm not sure if everyone knows what it is, but how would it affect, one's ability to buy a home in Ontario? Like,
Okay.
how would the stress test?
Yeah. So in 2016, something that was introduced was a 2% extra that you have to qualify for, right? So you have what's called a posted rate, which is what a bank offers you, and that's what your payments are based on. But in order to qualify for that rate that the bank offers you, you initially have to qualify at the bank rate plus 2%, which is the mortgage qualifying rate, right? And that's what they call a stress test. Initially, it was designed so that if whatever rate that you're operating right now, if the market swings 2% up, you can still afford it. Now, we know from our experience, it's gone way beyond that 2%, right? We went up almost 7% since we first started. But the initial goal was so that if there's a payment shock or if there's something happening in the market that banks have to raise your rates, if you're on a variable rate, or vice versa, if you're on a fixed rate, you first have to qualify on 2%. So as an example, if a bank today is offering you a 5.29% on a 3-year fixed, you first have to qualify within the debt to income ratios of that bank at 7.29%, right? So that's what really drives some of their calculations. Now, the lower you start off, the lower posted rate that you start off, that 2% qualifying, it becomes better. So that's why I said right now, if you're looking to make a purchase, if you're looking at a bank rate, what's better for you right now is most banks are offering at the mid to low range 5% for 3 years fixed versus the very best variable rate right now would be prime minus 0.8 to 1% off. So that would be somewhere within the 6.3 to 6.5% range. So right away, you'll have to qualify at 8% if you're in variable versus 7.5% or 8.5 versus 7.5. So in terms of if you're buying a home and you're looking to maximize your purchase power or get the highest mortgage amount, you're probably better off sticking to a fixed rate than variable, which means that if a Bank of Canada is reducing rates, it becomes irrelevant for you because you're operating in the fixed rate market. So you're really looking for a healthier economy where rates that are based on bonds are going down, right? So that 2% really does factor in how much you can afford. And if you can start off at a lower rate, you can qualify for a higher mortgage, right? So that's what you should be focused on. Can I get, $800,000 mortgage versus a $700,000 mortgage? Because those two numbers can really determine with your down payment what you can qualify for in terms of purchasing.
Thank you. So how has some recent changes in the Canadian mortgage rules affected options buying options or mortgage options, right?
Yeah. So the one major thing that happened, which is as of today, 2 levels of mortgage agents have come in. This was introduced last year, and the deadline was March 31st, 2024. There's a level 1 right now and a level 2. So a mortgage level 1 is anyone that can deal with residential mortgages from banks and B lenders. The second level that's come in, it was a test that we had to do, which I did and passed, luckily. The second level is then you have the option to talk to them when it comes to private mortgages and mortgage investment companies and any other alternative lenders that are outside the A and B realm, right? In terms of options, that gives you another third tier that if your client cannot qualify for an A lender bank or a B lender or any of those alternatives, then you are able to offer them a third set of solutions that are very handy in certain times. It doesn't apply to everybody, like not every client this product is good for, but at least you're talking with somebody who's versed enough in the full gamut of the different products they can offer. So that's the main one. And the second one that, this hasn't gone into effect. There's a lot of talk about it, which they're saying it might come in January of 2025. It's called the lending ratio. So this primarily applies to if you have a second property that's an investment property, you can only qualify for, again, 4.5 times your income for those mortgages. Again, a lot of details are yet to be released on that to come out, but we could potentially be looking at different guidelines starting January 2025 when it comes to investment properties, right? So a lot of that information is yet to come because they're just mulling it over. But right now, the powers to be, whether it is the governing bodies for the banks or the governing bodies for the mortgages, they're seeing that there's a lot of changes or different things that need to happen in order to help the struggling housing market. Again, it's not short of issues, but I think for the most part, we need to be looking at how much supply there's available, how much building there's happening. And we can see, like, from the numbers that are being released, the single detached home production is going little by little down in Ontario, and condo building is going up, right? Just because more people are putting a lot of money into condos, for example. But even the condo market, we've seen a bunch of different developers pull out. So again, we have a supply issue. In terms of regulations, a lot of it is the same. How much can you qualify for? What are the banks offering? And right now, banks are getting smarter. They're coming up with different programs that help us in order to get people qualified. So one of the advantages of working with a mortgage agent that has access to multiple different banks rather than just one person at a branch that only has access to one set of products is we look at different options and how we can get the client qualified based on what they need, and what are some of the programs that we could use to get them the highest amount available, or different terms, or different products that would suit them the best.
Yeah. I think that's so important, right? Because I don't think people understand it's overwhelming getting a mortgage, and it's overwhelming the whole process, right?
Yeah.
So, and I think if you don't have someone who can explain it to you, or help you understand, or help you kind of walk you through the process, it becomes like you're really kind of just signing on the dotted line, right? So a lot of times I say to people, understanding what you're signing up for, people get so fixated, oh, I'm getting this great rate, I'm going to go here, but they don't understand what they what's the risk of, what's the penalty, if you break it, if you take a 5-year rate, no one's going to tell you, hey, you plan to move in 3 years, the 5-year rate is going to cost you money, those sort of things, right?
Yeah.
And yeah,
so
go ahead.
Yeah,
No,
I
go
was going
ahead,
to say, like, a lot of the times, like, obviously, I look at people's incentives. For my incentives, what drives me is giving my clients options, explaining everything to them, hold their hand through the process. There's a lot of unknown, and there's a lot of steps especially for first-time home buyers, that they need to take. They're not familiar, and the way I look at it is, do you have someone in your corner that's fighting for you? When you go to a branch, when you go to a bank, banks are our partners. We use them all the time. But I always look at the person sitting across from me at the desk. They're getting a paycheck that's from that bank. So a lot of times I question their incentives. When it came to my experience, I went to a bank, and half the things that I wanted to know were not explained to me. And this was my first time buying a condo. I was naive in thinking the bank or the person sitting across from me had my best interest. And a lot of things that were pointed out to me later on during the process, I didn't like. If I known that in the first place, I may have not even gone through with it, right? So working with the right people, having them ask the right questions of you, and then you being able to ask the right questions back, explaining all the details, and giving you options, give you more than maybe one approval, and say, hey, this bank or this product is, has benefits and it has cons, whereas what you're looking for, maybe this one is better for you, and just like go back and forth. There are times where we can give you options. And that just comes from having the vast ability to be able to offer different things, and have access to different lenders. And it becomes important because a lot of the times, certain specific lenders can make a deal work because of their internal policies. Every bank is different, right? From the outside, they all look the same, but internally, how they underwrite and how they look at mortgages or your credit or your monthly payments or obligations, a lot of them are very different. And that's why knowing the different products and different ways that banks look at documents or certain things becomes very important, because it could be the difference of you getting a house that you want versus you having to not get it and go somewhere else and go somewhere smaller. You know what I mean? So little things matter like that.
Yeah, and I find the best deals I've done really are the ones that I've worked very closely with the client and their mortgage agent. Those are the ones that we are like bang on. Like, even if it's a first time home buyer, especially if they're a first time home buyer, right? It is so important to have that connection, to be able to kind of understand, what their numbers mean, right, to you when you're working through it, not just saying, oh, okay, let's, it makes a big difference. Makes a big difference. You mentioned earlier, you were talking about um, refinancing, or renewals. I would say
Yeah.
renewals, not refinancing.
Yeah.
We're talking about renewals. And, I was just wanting to ask you, what are some misconceptions and pitfalls to be mindful of? Um, Probably looking at the market, most people are going to come up for either up for renewal now, coming up for renewal in 2025. And
Yeah.
so I think this is an important topic. If you can expand on it and just help us,
Um,
understand, yeah,
yeah,
that'd be helpful.
absolutely. So again, I love banks. They're one of my largest partners. I work with a lot of them. But from what I'm seeing in the market is a lot of banks are trying to renew earlier than they have to. And they say, oh, this is the best rate today. That's fine. They might be offering at the best rate. But I would, first of all, if you get one of those letters, if you have a renewal coming up in the next 6 months to 1 year, good chance that a bank would have reached out to you or whoever your lender is and offered you a renewal. And they say, oh, it's nice and easy. You just sign here, and they look at a rate. I've been looking at some of these renewals, and 20 to 30% of them are very competitive. But a lot of the times they may not be the best rate that they're offering, right? And they just want you to sign right away so that the anticipation is the rates might be a little bit lower down the line. Again, there's no malintention there. They just want to get this renewal out of the way and they want to lock you in for the next 2 to 3 years. It's just standard business practice. But first thing I would do is if you get a letter like that, reach out to an independent mortgage broker, such as myself, and have them look at it in the market. And they'll, for me, I'll honestly tell them this was a good rate, this is competitive, or no, you can ask for this and this and this. But I'm at the same time, where I always have a conversation as well is, are you just looking to renew and get whatever you want? Or are you looking to maybe add a home line, add a secure line of credit, maybe get more money from your mortgage? What are your bigger life goals that are coming up in the next few years that we could potentially use this opportunity to look at elsewhere? Maybe another bank can offer you a better rate altogether, or more money, or a line of credit. What do you have coming up? Do you have a lot of bills that have racked up over COVID that we can help potentially alleviate with this or not? So it opens a door to an opportunity to look at other things, right? So that's the first thing. The second thing is that, a bank might renew my mortgage right away, and most of the time they renew right away without any questions asked. Once in a while, however, depending on your specific situation, they'll ask for you to represent maybe your income documents again, or some other documents, or how's the state of the property. Again, they're very, very, very low in that information. Like they won't ask a lot for that, but it does come up once in a while where you might be able to question if your income has changed, if your job has changed, right? They might ask for that, right? They might see something in your bank statements or whatnot. I had a situation where the client was not getting their pay in their bank statement, and his banker asked about it, right? And it's like, oh, what's happening with that job? Which was kind of odd. That was, that doesn't come up all the time. But so the other misconception that renewals don't just happen right away. Most of the time, 99% of the times, they'll flip the switch and they'll give you another 2 to 3 year rate. That might happen. Sometimes it's just easier for them to renew right away. Again, we have to look at the overall picture. Sometimes I look whether there's fees you have to pay if you break it or go to another bank. Can you do it right now? Do you have any incentives that were given to you that you have to give back? Right? So little questions like that. But we can look at the overall picture. But at the very least, shop that rate around and see if that is the best they're offering you. More often than not, you might be able to, haggle a little bit further down with that bank. So just don't take whatever they offer you, sign it right away. So that would be my advice. And then see if you have any bigger goals. If you'll have a pre-construction purchase that you made a few years ago that's coming up, maybe you want to take a larger down. Maybe you want to take some money out of your property right now to help with the down payment in 6 months to 1 year, maybe a year and a half. So use your renewal as an opportunity to basically look at your overall financial goal and see if it still makes sense for you to renew right away or make some changes.
Yeah, and you're right, because I want to say this, and please, all of you, listening. I know we're busy in our lives, and please don't misunderstand what I'm going to say. We are busy in our lives, and I think sometimes, me included, I don't have a mortgage, but but me
Right.
included,
Yeah.
we get so blinded by just letting the bank do their thing. Oh, we're already at the bank. The bank already has my information. I don't have time. This is too stressful for me to go and get all these rates and squabble about the rates. And so people actually take what's handed to them without really looking beyond to see, hey, would I get something better? And maybe you'll shop around and maybe you'll end up right where you are. And that's fine. At least you can say to yourself, hey, I did this work. It's no different than insurance rates, right? The stuff
No.
comes in the mail and we're like, oh god, we just have to pay it. We'll just pay it,
Yeah.
that kind of
Yeah.
stuff. But banks are also getting a little kind of weird these days, where they, or banks or lenders, wherever you want to call it, where they're pretty much saying to you, um, you know, we're going to see if you qualify again because maybe you were not paying in time or maybe you were having a little bit of difficulty. And so they want to now requalify you
Yeah.
because, they want to lose you or something to that effect. But all I would say is, don't write off what you can save, right? At least give it a try. And if you can
Yeah.
save, why not?
And with renewals, again, it gives you an opportunity to look at your mortgage right away. Again, banks are very good at sending out letters, making sure you renew. And if you're in a good situation, if your job has not changed or you may have more money right now, there's a good chance that we might be able to get you something better elsewhere. But at the very least, you're checking, right? And the way I always look at it is people look at flyers of all the different groceries as who's offering the best sales, right? And that's for something you can buy for like $20, $30. Why wouldn't you do that for one of the biggest
Yeah.
purchases you've made in your life? You shop around for cars, who's got the best every 4 years when your car comes up for renewal, you're looking at who's offering me the best rate, who's offering me the best price, bang for my buck, as they say. Why wouldn't you do that to a mortgage? If it's too cumbersome, if it's too costly, you're working with the right people, they'll tell you that right away. And this happened to me recently. Last week, I look at it, even though we could get a better rate elsewhere, when you factor in, fees and rates and making the changes, it just didn't make sense for a client. I just told them basically call your provider and tell them you're looking for this rate. He calls him back. He was super happy because he's like, you know what? You didn't make the changes for me, even though it would have been really good for me. It would have been good for my numbers and my pay. It just was not the right thing for the client, right?
Yeah.
So I always look at it as, okay, look at where the incentives lie, right? Who has the more incentive? Me, as somebody who's got no skin in the game, who's just happy to get a client and keep that relationship long term for the rest of that client's life, or someone who's looking just for numbers and targets to hit,
Mhm.
right? So for
Mhm.
me, incentives are really big. It's just in general in my life, incentives are big. When someone does something for me, I look at, okay, are they working an angle or are they just happy for me and whatnot? It's a natural thing that we humans do, right? We always look at, okay, what's the catch? Where's the angle? I think most people, when it comes to something sales, that's what they're looking at, right? So at the very least, get a second opinion on the rate, whoever it's with, whether it's a different bank or mortgage broker or whatnot. See if that it makes sense. At the same time, look at terms, right? There's a lot of fine prints for certain products that banks are offering that are based on a specific thing. So I'll give you the perfect example. One of the banks offers a cash incentive, but they're offering it on a 5-year term, and it's in the small print. So if you had a 3-year
Yeah.
term and you decide to make changes from that bank out, they'll claw that back, even though they offered you the 3-year rate. So it's the little details that might catch up with you down the line. Again, if you're working with the right people, it's their job to sort of point that out and hold your hand through that process. Same thing again from your world, right? If you're working with a really good realtor who knows the area, who's done the research, who as soon as they walk in, they see little things that you don't. It's one of the benefits of not self-representing and working with a realtor, right? It's so that you don't have to study up on the area or anything else. They have all that information ready to go. You're not running around to look at that information. They're presenting it to you. Same thing with a mortgage advisor, right? They've done the research, they know what's happening in the market, and they'll help you along the way to get you qualified to what you need. And if you can get qualified, they'll explain to you, okay, why not? And how can we get you there? I'm working with some clients that we have an ongoing plan in the next 6 months to a year, how we get them qualified to buy their first home or their second home or their recreational property, right? It's the little thing. So sometimes it happens right away. Sometimes you need to plan for it, and working with the right people can get you there a lot faster with a lot less headache and with a lot less money spent.
Yeah, no, absolutely. That makes such a difference, right? Like I say to people I work with, I said, I get it. If you're just looking for your one deal with me and then you move on, that's okay. But I'm a relationship person. I want your business for this one and the next one and your kids
Yeah.
and your grandkids and
Yeah.
whoever else is selling and buying,
Me
I want
too.
that relationship,
Yeah.
Um,
And my
but
and with my with my background, I used to work in a bank. I was working in actual banking branches for 10 years. I've done the teller role. I've done financial planning. So again, I have clients that I'm doing their mortgage, but they're like, can you help my son to, I want him to buy a house in the next like 3 years. Can you help him do some planning, do some whatever? And I'm like, I'm happy to do it. Again, talk to a licensed professional or like a licensed accountant or financial planner right now, but I'm happy to give them advice on how to go about getting certain things in place in order to recover their credit or save up or do different things. This is where we need to go. And these are some of the steps. I used to do this in the bank all the time, and I brought that experience with me in the mortgages because I think a mortgage as a whole, it can really affect your financial planning and financial goals, for the long term, right? And we saw that during COVID when there was a payment shock. A lot of people had to dip into their savings, their RSPs, or their nest egg, or a lot of the investments they have that wanted it down the line for their children. They had to go into that, and it was just sometimes it wasn't the right planning that was done, and for the homes. So that got affected. So now we need to replan. And again, I'm happy to help out and point out certain things. And I'm like exactly like you said, I'm relationship driven. I'm not looking for the quick buck. I'm looking to help you, your family, your uncles, and for all the homes for the rest of your life. And not providing the right advice or just looking to get a quick sale and get out is not the right way to go. It's not in my philosophy and it's not in my business plan.
Yeah. And I wouldn't even recommend. You know what I mean?
Yeah.
When people ask me to recommend, I want to recommend people who have the same sort of values, right? Hey, I know we've been on for a while and we should be wrapping up, but there's one last question. Let's maybe do a quick version of this.
Okay.
With this, with the looking forward into this economic outlook, what are your thoughts? What are the risks of buying a property or not buying a property? Like either way, right now.
So I can look at both. So the first thing is this was always taught to me again when I was in a bank and financial planning. When you naturally have inflation in the market, and that usually the good mark in a healthy environment, in a healthy market, is around 2 to 2.5%. What inflation means is like whatever you could buy this year, you have to spend 2% more next year to buy it, right? That's the layman's term. If you're saving money in a bank account right now and you're just waiting for things to come down, your money is not worth the same as it was last year. So the fact that you're just hanging on to savings, and again, this is not your rainy day special, like your rainy day fund or your slush fund or like 6 months, if I lose my job type of thing. This is just money you have saved up. That's not in a investment vehicle. Then you're sort of losing the value on that. So the sooner that you can put that in an investment and a good, asset would be a home, the better off you are. Now, the benefits of buying today, you get into a house faster. You get to accumulate equity a lot faster, right? Your home will always have a little bit of equity, right? It's building. Now, the rate of how fast it builds does really depend on the state of the economy. But at the very least, you have a hard asset. You can, if you're renting right now, you can, instead of that rent going to paying someone else's mortgage, you can go towards helping your mortgage. And again, they don't always add up 1-to-1. Just because you're paying $2,500 in rent, you might have to pay a little bit more depending on the desired home that you purchase. But at the very least, it's going towards something of an asset that you have, right? It's almost like a savings account for you. Because once you sell the house, you can probably recoup all that. If you move out of your rent, you're not going to recoup all the rent. And third of all, it's a place that you can start to build that's your own home, right? You can build a family, you can build a relationship with the neighborhood that you move into. Now, the downfall of purchasing today, obviously, you have things that you have to pay for that you maybe weren't paying for in terms of if you're renting, which is property taxes. And if you're purchasing something new, probably land transfer tax. So those are taxes that come in that are part of the purchase. Again, with a good plan, you can probably accomplish for all that and put it into your calculations to make sure that affordability is something that you can afford it. Essentially, it's within your affordability parameters. If the downfall of waiting, again, as I mentioned earlier, is you could be looking at an environment where we're going to have less homes because, again, immigration, people are still coming. We grew very fast. So you're looking at a lot more competition. And if rates go down, a lot of people that were waiting on the sidelines to buy are also joining the market. So you could potentially, the same home that you were desiring that was at a certain price point, it might be much higher than your price point. It might even be priced out of what you're qualified for. So you might have to change your area. So it takes away from a little bit of flexibility that you might have in the market right now. But I'm always a believer in investing right away is always the key, and no better asset than a home.
Yeah, you know what they say, you can't connect the dots looking forward, you can only connect it looking backwards. And therefore you just
That's
have to,
good.
ride with your gut feeling that whatever choices you're making with the information that you have on hand is the right information, right?
Yeah.
And with that, I want to wrap up today. I want to thank all of our viewers that tune in for the show. I so appreciate your time. As always, my name is Jacqueline Watson. I'm a realtor with Sutton Group Tower in Toronto. And today my guest is Mani. And so, Mani, tell everyone how they can get a hold of you again before you leave.
Yeah. So my handle is mortgage.manny. They all know me as Mortgage Manny in Toronto. Or you can message me on my social. You can message me through Mani Najafi on LinkedIn or my phone number, 416-399-1993. My phone's always on. Happy to talk to anybody day and night. And if you have any questions, don't hesitate. Get in touch with me somehow. You can always also email me at manny@northpowermortgages.ca.
Yes, and like I said, for those of you watching today, thank you so much. And Mani, thank you for your time. I so appreciate it.
Thank you for having me.
And your, sharing your wisdom with us and helping my clients to, navigate this tricky market. And for those of you watching, you have questions, reach out anytime. We're happy to help you with whatever you have, whatever your ventures are. But thank you so much. And until next time, we'll see you soon. Bye.
Thank you.
Bye.
Goodbye.